What's up, guys? Welcome back to the channel. Welcome back to another video. If you're stopping by the channel for the first time, please consider subscribing to my channel. And while you're at it, smash that like button for me. I really would appreciate it. Also, hit that post notification bell for me so that you're notified every time I upload a new video. Be careful down in the comment section of the videos. A lot of spam, a lot of scammers. I will never ask you to contact me by WhatsApp or Telegram. I also do not invest money for my subscribers, and I do not offer an investment trading program. So please be careful. Don't get yourself scammed. If you want up to 12 free stocks, Weeble is going to give you up to 12 free stocks when you open a new Weeble brokerage account. Put at least one penny in that account. They're going to give you up to 12 free stocks for just trying out their new brokerage app. There's a link down in the description box of the video. Go open that Weeble account today, guys. Go get that free stock. Go get that free money. And I'll even do you one better. If you open a new Weeble account and you send me a screenshot of that account, I will send you a Weeble tutorial video that will walk you through how to do fractional share trading. All you got to do is follow me on Instagram at RichardFain28 and then send me a DM with the screenshot of the new Weeble account, and I will send you over that free Weeble tutorial video on fractional share trading. Well, guys, I don't believe we're going to have a December Santa Claus rally in the stock market. And the reason I don't believe that is the Fed. The Fed made sure that Santa Claus rally would not happen by increasing short-term interest rates last week by 50 basis points, which represents the 7th time this year that they've increased short-term interest rates in an effort to fight down inflation. After the rate hike, the Fed chair, Jerome Powell, made some comments. And in those comments, he was pretty hawkish about continuing to increase short-term interest rates in 2023 to continue fighting inflation. And I tell you what, those comments is really what has scared investors. A lot of people believe right now we're in a recession. I'm one of those people that believe that. Even though the Federal Reserve hasn't come out and officially called a recession, I believe we're in one, right? Just look at what's happening in China. China produces a lot of our goods and services, guys, that are sold here in the United States that we buy. So anytime China has problems with the pandemic, which they're having some major problems with the pandemic now, that's going to impact us, right? Like I said, we are big importers of goods and services from China. And with them having those pandemic problems, that may slow down our supply chain again. And if it slows down our supply chain, again, man, inflation is going to have a hard time coming down, right? So yeah, we got to closely watch what's going on in China because it will affect us. Housing, energy, food, all of these things like that are big components of inflation. And the only way to get it down is we got to slow down spending on some of these things. Now, I get it. You can't slow down spending on your core items like food. I get that. But you don't have to go out to eat in order to consume food. And that's what we got to slow down because people are still spending a lot of money on eating out, guys. They really are. And until we can reel that in along with some of these other goods and services that we're buying that we really don't need, it's going to be hard for us to get inflation down to where we need it. Even though these last 2 months, October and November CPI report does show inflation coming down, will that continue? I hope so. I hope when we get the December CPI report, we can post 3 months in a row where inflation is coming down. But the Fed is not going to bet on that. They're just not betting on that. So they're going to continue hiking short-term interest rates and doubling down, right? And they are projecting to at least, at minimum, increase short-term interest rates by another 75 basis points in 2023. right? Starting probably in February. So we're not out of the woods by no stretch of the imagination, guys. We're just not out of the woods yet. Our economy is teetering on, could be falling into a deep recession, in my opinion. Like I said, when you look what's happening, especially with China, man, because they are so critical to our supply chain for our goods and services. They really are. And if they go to full lockdown because of the pandemic, you know it, our supply chain is going to lock down as well, which is going to do what? Make prices go up. Because why? Anytime you got a demand for something, but you don't have enough supply to meet that demand, prices go up. And I think if that happens with China, if they go into full lockdown, we're going to be in for a bumpy 2023. And the stock market is going to feel it. I think at some point, the real estate market will feel it again, especially in the housing market, because what's going to happen is as short-term interest rates keep going up, those 30-year fixed rate mortgage rates are going to go back up again. They're still high. I mean, you're still talking about a 30-year fixed rate mortgage, probably in that 6 to 6.5% range. And a year ago, they were 3%. So they're still high. But since they came down slightly, because, you know, a month ago, they were 7%. So they came down to 6. People jumped back out to start buying houses again. And then boom, real estate home sales started going back up. But the Fed is going to be looking for what? Data. They're going to be looking for data. And if the data shows that inflation is coming down, the Fed may stop hiking. But if that data shows inflation is not coming down, they're going to continue hiking, which will certainly affect the stock market, because anytime short-term interest rates go up, the stock market typically goes down, right? That's the way it typically works. But again, not bad for us as investors, because we are trying to do what? Build wealth. So anytime we can buy these assets, these paper assets at a discount, we should be taking advantage of that. I would recommend you stay away from individual stocks though in 2023, right? In 2023, stay away from individual stocks. Just stick to ETFs. Because again, man, you don't want to be caught out here trying to be the expert. And when you're not, you want to stick to investments you can make in paper assets that do not require you to be the expert, in ETFs, in index funds, or to investments that don't require you to be the expert, right? So stick to those. Stick to S&P 500 ETFs or total stock market ETFs. Those are the two you stick to. You want to be in the broader stock market. You want to have all of the upside of investing in large blue chip companies, but you want to invest in groups of blue chip companies. You don't want to isolate yourself to investing in one or two blue chip companies, because if something happens, you're going to be stuck like Chuck. You know, if you investing in Amazon and Amazon keeps falling, or if you investing in Tesla and it keeps falling, and I'm not saying both of those companies won't turn around at some point, but why take yourself through that stress, right? Because it's going to be very stressful if you're investing in those two companies just alone, individual stocks. But if you go over here to an ETF like an S&P 500, now you got the top 500 companies in America, not just tech companies. You got every industry, every sector. And so if the tech industry is not doing well, but let's just say the energy sector is doing well, or healthcare is doing well, then you got more diversification when you're in a ETF or index fund that gives you groups of companies instead of isolating yourself with one or two companies. So stick to that in 2023. That's what I'm going to be doing. No more individual stocks for me. I'm going to stick to ETFs and index funds. I learned my lesson with Tesla. I ain't going to repeat that again. I just think that was my worst investment in 2022 was in Tesla. I did it all at the wrong time. And right now I'm paying the price for it. Do I think it'll rebound at some point down the road somewhere? Yeah, but it's going to be a lot of pain for me thinking about it. So I learned from my mistakes. I'm not doing that in 2023, sticking to ETFs and index funds. So guys, drop me some comments and let me know what you think about what's going on here in the United States that's, contributing to where we're at in our economy. I mean, it's just a lot of stuff going on. and everybody's saying different things. We don't really know what to believe. All I can tell you is zero in on what you're trying to get accomplished in 2023 financially, and then just go buy you some assets that match up to that. For me, it's just building wealth, and I'm gonna do that through ETFs. I'm gonna do it through index funds, and it's gonna be S&P or it's gonna be total stock market. That's it for me. If you want those 12 free stocks from Weeble, click on that link down in the description box. Open up that new Weeble account today. Go get that free stock. Go get that free money. If you're stopping by the channel for the first time, please consider subscribing, share the video, smash the like button. Thoughts become things. If you can see it in your mind, you can hold it in your hands. You guys keep chasing your greatness. Never stop believing in yourself. And I'm gonna catch you on the next video. Peace. Today's video is sponsored by my company, RF Financial Consulting. And in my company, I work with individuals just like you through financial mentoring and coaching sessions. And in those 1-hour sessions, we talk about strategies to help you get to your financial freedom, whether it be through real estate investing, stock market investing, creating additional streams of income, credit card arbitrage, or starting and growing a business. If that's something that you might be interested in, there's an email address in the description box of the video. Send me an email and let's discuss if I'm the right fit for you.